The rich are getting richer, but not through saving their money. Kiyosaki believes that the world economy is heading towards the worst economic headwinds since World War II, emphasizing the need to secure one's financial structure. And in these challenging times, the current difficulties we face seem poised to intensify. While economic pundits offer strategies for navigating these tumultuous waters, the looming specter of a recession instills fear in many. However, amidst the apprehension lies an opportunity to shield oneself and potentially thrive. This video explores avenues for investment in some assets, promising not only protection during the downturn, but the potential for prosperity when the economic storm eventually subsides. So let's get started. Robert Kiyosaki, the author of Rich Dad, Poor Dad, accurately foresaw the collapse of Lehman Brothers in 2008, and his prediction proved to be correct. Robert Kiyosaki, known for his book Rich Dad, Poor Dad, has once again made predictions that have unfolded in a stark manner. His recent warnings about major US banks failing have materialized, and he continues to express grave concerns about the global economic landscape. According to Kiyosaki, the world is currently experiencing a significant downturn, with real estate collapsing and layoffs commencing as early as April. He cautions that inflation could lead to a more severe crisis than the one observed in July of the previous year. Also, Kiyosaki predicts the possibility of a depression and hyperinflation, emphasizing the imminent collapse of the US dollar. In his assessment, a global downturn is a more alarming prospect than a global depression. Robert Kiyosaki, described as neither crazy nor a psychopath, is not only delivering dire predictions, but also offering a ray of hope. He provides amazing insights on how to navigate and survive the impending recession. By watching the video until the end, you can discover valuable information about acquiring affordable assets today, which could serve as a means to not only weather the recession, but also emerge from it with increased wealth. Living through a recession can be a profoundly challenging and dark period. Some individuals may have a slightly less distressing experience, while others bear even more severe hardships. For those who haven't personally faced the horrors of a recession, they likely know someone who has. The bottom line is that a recession poses a great threat to individuals striving to maintain a standard of living where they can afford the essentials. Despite government promises to address the basic needs of citizens, it often seems as though the government is in conflict with its own people. The constant imposition of obstacles makes it increasingly difficult for individuals to lead decent lives with dignity. Robert says, Robert Kiyosaki consistently says that relying on the government for care and support is a risky approach, and this sentiment is not unique to one nation. It resonates globally. According to him, governments in general do not truly care about individuals. Drawing from his own first-hand experiences, Kiyosaki witnessed the government's apparent indifference to families in crisis, which motivated him to take control of his life rather than relying on government assistance. He encourages others to make a similar decision, emphasizing the need to be proactive in managing one's life and not depending on government promises. Kiyosaki has been vocal in his criticism of the Federal Reserve, particularly for their decision to raise interest rates. He contends that such policies contribute to making the world a more challenging place to live. His recent criticism stems from the belief that raising interest rates could lead to a crash in stocks, bonds, real estate, and the US dollar, potentially causing a staggering $1 quadrillion crash in the derivatives market. The sheer magnitude of a $1 quadrillion crash is described as too painful to imagine. Robert Kiyosaki shows a lack of trust in institutions such as Wall Street, the Treasury, the Federal Reserve, and the Biden administration. His emphasis is on the destructive impact he believes the Federal Reserve and the Treasury are having on the US dollar. Kiyosaki's outspoken criticism of government decisions stems from his belief that their actions have global ramifications, not confined to the borders of the United States. Unlike a century ago, when the US economy's downfall might not have significantly affected other countries, today's interconnected world means that a collapse of the US dollar could translate into a worldwide economic crisis. Kiyosaki highlights the heightened interconnectedness of economies, underscoring how decisions made in one nation can have far-reaching consequences globally. Despite Robert Kiyosaki's warnings about the potential rise in bankruptcies, unemployment, and homelessness, he offers a glimmer of hope by pointing out good news for investors seeking bargains. In revisiting the initial tweet, it's worth noting that Kiyosaki is distinguishing between the worst kind of depression and a global economic downturn. While a global economic downturn is a challenging scenario, Kiyosaki seems to suggest that it may not be as dire as the worst kind of depression. His advice for investors searching for bargains implies that even in tough economic times, there are opportunities to capitalize on undervalued assets. In his straightforward recommendation, Robert Kiyosaki says that everything is on sale, including silver, gold, and Bitcoin, which he considers priceless. His repeated advice to buy gold and silver at their lowest points, potentially as low as $30, encourages individuals to invest in tangible assets. He specifically mentions affordable options like a silver eagle, silver buffalo, or silver bar, which can be purchased for around $20 to $25. Kiyosaki also thinks that despite the accessible cost, the knowledge of these opportunities is not widespread, and he aims to bring awareness to the affordability and potential benefits of investing in precious metals during economic downturns. Inflation has historically been unkind to money, and to see a change, one must break away from repetitive actions that yield the same results. Robert Kiyosaki predicted that Bitcoin investors would benefit when the Federal Reserve printed trillions of dollars, emphasizing that he is an investor, not a trader. He expressed pleasure when Bitcoin prices fall. Kiyosaki is personally invested in gold and silver to avoid losing money to inflation. He advocates buying real assets with fiat money, citing his resilience during crises because government policies haven't significantly affected the value of gold and silver. Kiyosaki is genuinely concerned about the lack of financial education in schools and the rising prices of gold, silver, and Bitcoin. Encouraging people to purchase at least one silver coin for $30, he highlights the potential for financial gains. While the Bitcoin price has risen by almost 39% and gold by over 5% since the beginning of the year, Kiyosaki acknowledges the hesitation of many to embrace the idea of buying precious metals. He attributes this reluctance to trust in the strength of a dollar, emphasizing the devaluation risks associated with increased money printing. Kiyosaki anticipates wealth for gold, silver, and Bitcoin owners as the Federal Reserve changes course. He warns that those who ignore these warnings act foolishly and emphasizes his lack of personal gain when followers buy silver coins, expressing empathy for workers facing the challenges of high living costs. Kiyosaki urges proactive measures, stating that the future is shaped by today's actions and encourages seizing opportunities to secure a better financial future. In simple terms, Robert Kiyosaki believes that taxes, inflation, and the stock market can diminish the value of conventional money. To safeguard their wealth, he suggests that the rich prioritize assets generating tax-free money. This means focusing on investments that offer returns or income streams not heavily affected by taxes or inflation. Kiyosaki encourages understanding and navigating the financial system to build and preserve wealth effectively. Rich versus poor. Robert Kiyosaki's perspective on the difference between the rich and the poor centers on their approach to wealth building. According to him, the rich focus on acquiring cash flow assets like rental properties, oil, and food production. Instead of saving conventional currency referred to as fake money, the wealthy opt to save in assets such as gold, silver, and Bitcoin. In contrast, Kiyosaki suggests that the poor and middle class often seek jobs that promise a steady paycheck but lack job security. His emphasis is on the importance of investing in income-generating assets rather than relying solely on traditional employment for financial stability. Kiyosaki encourages a mindset shift towards building and managing assets that produce ongoing cash flow. In summary, the key takeaway is that, according to Robert Kiyosaki, wealthy individuals prefer assets that generate genuine, tax-free income. They steer clear of traditional jobs and what he calls fake paper assets. Instead, they prioritize saving in real assets like gold, silver, and Bitcoin to secure lifelong financial stability and freedom. Paper versus alternatives. Robert says it's crazy how people want to save something that depreciates over time. Kiyosaki also consistently praises precious metals, real estate, gasoline, Wagyu beef, and decentralized finance (DeFi) assets over traditional paper currencies like the US dollar, which he deems as fake money. In his recent statements, he voiced his belief that saving dollar bills seemed illogical to him, asserting that he preferred accumulating what he calls the 4 Gs: gold, ground, grub, food, and gas. This, along with silver and Bitcoin, represents Kiyosaki's focus on alternative investments rather than relying on traditional fiat currencies. Robert Kiyosaki's personal life advice: 10-10-10. When Robert Kiyosaki faced financial difficulties, he and his wife devised the 10-10-10 plan to prioritize paying themselves before creditors. This plan involves allocating 30% of their monthly income to investments, 10%, charity, 10%, savings, 10%. Kiyosaki, critical of traditional savings accounts, stresses the importance of paying oneself first to have funds available for investing. He discourages keeping money in low-interest savings accounts, asserting that savers often lose out to inflation. Kiyosaki advocates for taking action with savings and the need to explore investment options rather than relying solely on saving money. While Robert Kiyosaki paints a dark picture of the economic landscape, he also provides a pragmatic approach for individuals to protect themselves and potentially prosper in the face of a recession. According to Kiyosaki, the key to wealth is not the amount of money one has, but the actions taken with that money. The focus is on paying oneself first, ensuring there is money available for investments. Kiyosaki encourages individuals to start with any amount, be it $100 or $1,000, and invest in assets rather than leaving money in a stagnant savings account. The ultimate goal is to have money for investments and to educate oneself about profitable assets, enabling wealth to grow faster than the inflation rate.